This is the Tax Show with Peter Stephan from the Tax Resolution Institute. I'm Brian Whitman from The Morning Answer. Go to the website, taxresolutioninstitute.com. There's a ton of information right there on the website, taxresolutioninstitute.com. If you've received a letter, a notice, if you've got an unresolved tax issue, maybe you have years of unfiled returns, they've sent you a letter, they're going to garnish your wages, give them a call at 800-658-7590. And talking about these offers in compromise, I love to ask Peter about his success stories because you're a very humble guy. But sometimes I almost have to force him to tell you that someone had a $5 million bill that they settled for $5,000. They had a $500,000 bill. That's a bill for $500,000, which was settled for $1,050. Tell us about the person, the taxpayer came to you, had a bill for $36,000 that they owed.
Well, we almost didn't take the case because it doesn't matter whether you owe $36,000, $360,000, or $3.6 million. Basically, the work is the same. The father of this young lady who had this $36,000 bill decided to pay our fees, and we took the case, settled that for $500. So $36,000 for $500 was settled on that particular one.
Now, I have to tell you, when I hear that, I think that it's almost unbelievable. I mean, how in the world can someone get a bill for $36,000 and then in reality they owe $500, or you submit an offer in compromise and you must be very persuasive, or there's something going on where that bill, I mean, that's a difference of, I'm quick with math, $35,500 saved if you settle that for $500. That's really amazing.
Well, these are truly pennies on the dollar cases. We have other cases that we settled $250,000 for $80,000. It's very formula driven on the IRS side. What I would like to add, though, Brian, is it's the perfect time to talk about an offer in compromise with the IRS. Last March, in fact, the IRS loosened up their criteria because the IRS is very formula driven. They basically want everything you own and a multiple of your disposable income.
They're sweet like that.
They're real nice. But the fact of the matter is, many people don't have equity in their homes and don't own a whole heck of a lot after putting their the last of their savings, let's say, into their businesses. And so usually what we're dealing with are people who are just starting to get back in stride, starting to make a little bit of income, and then based on what we call IRS national and local standards, have disposable income. Well, 2 years ago, to settle, to do an offer in compromise and settle with the IRS, the multiple for disposable income was 48 times. So if you had $100 in disposable income, based on these IRS calculations, you would have to offer $4,800.
Okay.
And if you had $1,000, it'd be $48,000. And many people didn't qualify because, well, they either couldn't come up with $4,800 or $48,000, or they had too much disposable income. Now the multiple is 12, so it's only $1,200 or $12,000. And what that means is these bills of $100,000, $200,000, $500,000. And by the way, if the people out there are listening, think that these are high numbers, they're really not. Taxpayers that make $50,000, $75,000, $100,000 a year don't file and have interest and penalties accrued and several years of taxes easily get to these numbers.
This is the Tax Show with Peter Stephan from the Tax Resolution Institute, taxresolutioninstitute.com. They are the Institute. This man, Peter Stephan, has literally written the textbook. I have it. I own it. It's on my coffee table. Light reading. Sometimes, people come over and say, would you like to read about tax resolution? They say, yes. We break open the textbook, which you actually authored about tax resolution. We're talking about offers in compromise. Some people are just not eligible for an offer in compromise, or sometimes, Peter, it's rejected, you appeal it, and it's back and forth, right?
That's correct. Let me tell you a story about a good percentage of offers in compromise are appealed because the revenue officer just may be one of those intractable people.
I love your adjectives. You're such a diplomat.
Well, Brian, I've run into revenue officers over the years who think it's their money, or who have a philosophical objection to people not paying their taxes, as though they actually did it on purpose, and for the most part, that's not the way it happens. People have medical issues. People have lost their businesses. They've lost their homes, and at the end of the day, they owe the government $50 to $5 million in taxes. Typically, the cases that we handle are between 100 and 500,000. We do get some lower and some higher, but let me tell you a story about appealing and offering compromise. We had a situation where clearly the revenue officer, the offer specialist, when it came back from Memphis, Tennessee, made a mistake and denied the offer. We appealed it and it ended up in Glendale here to an appeals officer who was also very intractable. In fact, he misinterpreted the IRM, that is the Internal Revenue Manual. When I pointed it out to him, he said, "Well, I don't care. That's my discretion." I like telling this story because the ending turned out okay, but it wasn't without a heck of a lot of persistence and effort. What I did was I explained to him that of the 4 years of taxes that were owed, all but $9,000 of it, that is the latest year, were dischargeable in bankruptcy. And you know what his answer was?
What?
Go ahead and file a bankruptcy.
Oh, he threw down the gauntlet with Peter Stephan of the Tax Resolution Institute. That's not a challenge I would throw down to you.
Yeah, not a good idea. So So Brian, what I did was I walked him to the office next door, and we filed a Chapter 7 for this gentleman. And about 4 or 5 months later, God knows why the file was still on this man's desk. I got a call, and he said, "What's going on with the Mark so-and-so case?"
Right.
And I said, "I'm not sure why you're calling me, but let me refresh your memory." And I did, and I told him to send the $9,000 to collection. By the way, we had offered $80,000 on a $240,000 liability,
which he should have taken in a second.
Well, it looked that way, and in fact, I asked him. I said, "Can we talk now?" And he said, "Sure." I said, "Do you think you did a good job for the government?"
Oh, how funny.
And he said, "Nah, you know what? You're right." Well, but that's not the end of the story. The offer was accepted.
Right.
And, I'm sorry, the bankruptcy was filed and all but $9,000 was paid. Well, that's not the end of the story, because about a year or so later, we appealed yet another offer. Almost the identical numbers, $80,000 for about $220,000 or $30,000.
Different taxpayer.
And lo and behold, it ends up on the same appeals officer's desk.
How funny.
And I think that's just a great thing, because I'm hoping that last time he learned his lesson.
Right. Once bitten, twice shy.
Yeah, well, not true. He was with the IRS 28 years. He's since retired, thank goodness, because we actually have a third round with him. And so in that instance, I had to find his boss's boss in San Francisco. The case was reopened. The offer was accepted. The taxpayer made the payments, and the story ended well. But these are the type people that you run into from time to time. Many of the IRS revenue officers are very good people. They know the law, and they're not so intractable. But you do run into people like this from time to time, and you have to know when to pursue it, when to appeal it, and when to appeal the appeal.
That's right.